Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Friday, January 3rd, 2020. Again, I want to wish everybody Happy New Year as we conclude the first trading week of 2020 of the new year. And what we're going to do is a quick overview of the broad markets. Just look at the really just probably stick with the 60-minute charts on this one. Couple developments worth noting. We did get some sell signals this week, finally for the first time in a while, and I think those sell signals are quite likely still in place. I'll go over the charts, and in doing that, I'm going to make this a public video. I'm skipping once in a while if there's not anything new. I feel like it's the same thing over and over and over. We've been in just a very resilient uptrend with divergences building. We've had some, pullbacks along the way, but we haven't had any half-decent sell signals. I'm just saying half-decent. We haven't had any solid sell signals, nothing on the daily charts, weekly charts in quite a while, but we did get some earlier this week on the 60-minute charts. As such, what I'll do is I'll continue to, maybe skip a day for the public updates if there's not a lot new to report. And in doing that too, I want to just reiterate that on the YouTube channel, if it's a video that's released publicly, is general market analysis. 90+% of what I cover and what I trade personally are individual stocks, futures, ETFs, commodities, gold, bonds, currencies, Bitcoin, other things like that, via some proxies. And and as I covered today, I did an update on the swing trade ideas. Easily 90% or more of all trade ideas shared on the site for months now have been long side trade ideas. So I did an update today on the trade ideas that I just shared right here from this post on December 11th, covering, did a quick update on the markets and then covered about a little less than a half a dozen stocks. Nearly all these stocks are up. I don't think any of them are down. Maybe one's about where it was then. Most of these, if not the majority, are double-digit gains since then, and we even had a couple triple-digit gains like this. FCell back then on a break above, it was an objective long here on a break above the trend line with a second add-on or objective entry above 99 cents. I covered that in today's video. I'm not going to spend a lot of time on it. And so these are the things that are moving, and also moving a lot more than the market. The market's in a very resilient uptrend, but this stock is up 440% since it was posted there exactly 3 weeks ago today. Ran up 440%, and then the very next stock in that post was NNK right here. And that one at the time was in this beautiful basing pattern with a breakout to be triggered above 194 and then a second buy signal above the trend line with the next resistance level above 266. And of course that one as well went on. That was another triple digit gainer in just the last few weeks. And so again, this is where the easy money is to be made. From the breakout there above 194, it rallied in just 4 sessions 153%. So again, the easy money or the big money is to be made. There's easy money to be made in the market lately. But again, and this is as I start this video and what I covered today on the update with the trade ideas and the broad market to members, is that when the market is at all-time highs, my trading style is largely, there's a lot of things I incorporate into my analysis, but it's very heavily weighted on support and resistance and trendline levels. And when you have the stock market at or near all-time highs, you don't have any resistance overhead. You can go back on any chart you want. You can look at a monthly time frame. The stock market's never been at this level. As such, you don't have any resistance levels overhead. All I can do on the market is recognize the trend is up and then do what I'm doing today, and we'll get into right now, is highlight levels that will trigger the next tradable pullback and or objective levels for longs to step in. If you're bullish and you want to buy dips, then again, that's where my skill set lies, is identifying key support and resistance levels that are likely to produce a reaction. So let's dive into this. On that, let's see. Was it Monday? It was Monday, right down here. That's where I posted sell signal triggered on the on QQQ in the U.S. stock market. So we're up since then, but not a lot. And I'm going to go over the charts right now and tell you why I think that's why we're still. There's a good chance we'll probably see some more downside next week. Today was a first decent down day in a while, other than of course Monday. All right, so we're going to start out where it posted this morning. These charts were posted before the market opened today. This one was yesterday's chart right here. This is the RTY small cap futures posted this morning, and we had the breakdown. This was Monday, and again, I'm looking at a chart posted earlier today, but these were the breakdowns that occurred. I should take that back. The small caps broke down, as I mentioned, and the S&P 500 before the NASDAQ 100. I was just waiting on NQ and QQQ, which to me is by far the most important index because it's tech heavy. It's almost 50% tech stocks. Even though that's not that heavy a weighting in the S&P 500, that is still the largest sector. And make no mistake about it, where Apple, Facebook, Amazon, Microsoft, what I call the FANG stocks, FAAMG, where they go, the market goes. So again, we want to put the highest weighting on QQQ, especially if the others are broken down. You need the Qs to break down. So again, this was a small caps, and at the time, I mentioned this, we had an impulsive leg down. So we had a breakdown there. The small caps tried to rally and came close to their previous high right there after the breakdown. But as I said at that point in time, this still looked like a counter trend bounce. And again, this chart was posted yesterday morning. And that's the next target zone. You can see it runs down to 1639.50. Okay, that was yesterday, and then zoom in this morning, posted that target was hit. So almost a perfect tag of the bottom of my target zone right there, and followed by the expected bounce. What I like to say is the initial tag of a support level, levels that I've identified as support where you're likely to get a reaction. A reaction I define as a bounce and or a consolidation on that level. And so now we've had it. So that opens the door for the next leg down. And I mentioned, bounce back would be, I put it in that post. This would be resistance here on any bounce where it would offer the next objective shorting entry about 1659.37, or we'll call that 1659.40, rounded off. And let's pull that chart up for you now and take a look at RTY. So there it is. So we overshot 1659.40 a little. Remember, that was that chart I was just on was from this morning. There was the tag of that downside target, and that may be it. Again, referring to the correction off this wedge break here. It's a pretty decent correction. It exceeds the measured target of the wedge, which is the widest part of the wedge. We'll get to the large caps here in a second. So that's the widest part of a wedge, and as a rule of thumb, you take the widest part of the wedge, add it to where the wedge breaks down. That gives your measured target. In this case, I had a little bit lower than the measured target. It's a pretty solid support zone. So where do we go next week? Well, we'll see. My convictions are not super high. They haven't been for a while. We've had quite a few check marks, as I said, with sell signals lately, and with the final kicker on Monday, that breakdown in the Qs. However, the trend has been so resilient lately, all dips being bought up pretty aggressively, and so you have to kind of counter that out. And the bottom line is, I still believe there's more downside. I think we can come a little lower, especially on the large caps as well. And if they do, the small caps will probably follow down. So I lean towards more downside next week. But I can just say my convictions aren't super high, but I remain short and heading into next week. And let's look at the large caps. Okay, so on this morning's post, I covered this was yesterday's chart, posted yesterday morning, Thursday morning, where I said break below this minor uptrend line right here in NQ. That would trigger a correction in the NASDAQ 100, or NQ is NASDAQ 100 futures. We still had negative divergent high, and again, that was yesterday. So this morning, overnight, in the overnight early morning session, we got it. There's our sell signal. You can see we didn't just limp down through there when that minor trend line broke. Same one highlighted yesterday. You had an impulsive red candle and a solid 60-minute close. That's about as good of a check mark as you can get for a sell signal. Now, remember, we're living in the world of the 60-minute charts here. Let me reiterate again, we do not have any sell signals on the daily time frame or the weeklies, especially the monthlies. I've gone over things to watch there. Anything's possible, as I talked about recently. If this plays out, we overshot this a little. We hit that my 87.45, 90-ish target this morning, and then bounce from there. And so at the time we had tagged this 88.11 resistance, and I have us going down, and I still do going down here. We overshot that a little bit. Again, that was this morning's chart. Let's see where we finished the day. We went a little bit above there. As you can see, this is a live chart right here of NQ. I'm going to zoom in a little bit. So to just break it down again, to me this is the most important index. There was our good sell signal on Monday. Solid impulsive break. It aligned even better, looks even better on QQQ, which I'll get to here in a second. And this was a snapback rally. Sometimes snapback rallies will take you a little bit, like on the small caps, they'll take you a little shy of the previous high. Sometimes you'll equal it, and sometimes you'll make a marginal new high. Doing so, we still had divergence here on the RSI, and you were still pretty overbought. And again, there was that trend line break right there that set it all off. Hit that first target that I had there, or that first support level at 87.4588. Pretty decent level, and I still think there's a good shot. Again, I wish my convictions were higher. I'd have a much heavier position. Most of the trades that I've been looking at lately in trading are long trades, but for the indexes, again, you can play the pullback to support game. I'm just more interested in tactically, shorting these pullbacks, and then we'll see what happens next week. Depending on what we see, if we were to happen to see some really impulsive selling and smash on through some of these levels like they're not even there. We've already had a reaction off 87.46. That was the level there, 87.46. So I don't expect much. If we come back down on it again, we'll probably go through it because we got our bounce there. I look for a bounce off the initial reaction. And so that if we break it, if we even get close to it, I think we'll come on down through there and hit to the next support zone, target zone. That's right here at 86.2550 down to about 85.94. So, and we'll see if and when that even happens. Maybe this is it. Maybe that was it for the correction right here following this 60-minute trendline break. I don't think so, but we'll see. And just to wrap up with ES, I'll get to then I'll do the ETFs, SPY, and QQQ, and IW, and then we'll conclude the video. But that's it. So I posted this morning as well that we had the breakdown, of course, in SPY or ES, the S&P 500 futures. We broke down a little bit before the NASDAQ NQ, and had our first leg down, kicked up, made a slightly higher high, and just like the NQ, I had this trend line here on ES. We broke down there and we back tested. So whereas NQ was stronger, NQ kept riding up its trend line and didn't break down till right there. Whereas at the same point in time, and it's not mere coincidence, I often find it's not, you see this happen a lot. Well, SPY once again broke down first because it was the weaker of the two indexes. The tech heavy QQQ, at the same time QQQ was riding up above its trend line, ES went and back tested, and then boom, when ES rolled off the back test impulsively, that's when NQ broke down. You came just shy of my 3202 target there and reversed and bounced. Overshot this support a little bit today, but closed right about back on it. That's about 32 and change or somewhere. So that's where we close the week, or we're trading right now. And some things to note. You have the PPO down here in bearish territory down below the zero line. The trend is bullish when it's above the zero line, bearish when it's below. There are some whipsaw signals you get from time to time, but that's where we're at right now. I didn't show you that on NQ, but same story there. You can see the PPO, and it's not just below, but it's rolling back down. That's something else I'd look at. The zero line on the PPO, which again is in the middle here when I'm putting that line, often acts as support when tested from above during a bullish trend, and it acts often as resistance from below, and so that would mesh well with a move down tomorrow, particularly a gap down or a sell-off shortly after the open next week, and take us down again to that target there on NQ. Okay, let's look at the small caps, and we'll wrap it up. Or let's look at the index ETFs, I should say, and then the small caps. QQQ. So this was it. There was that sell signal posted on Monday. Like I said, the biggest red candle that we have had in weeks, or if not months. Is pulsive, and it was a clean break of the trend line. We set up a little bear flag, but we never really broke. We didn't break down impulsively, nor did we take out. That was my first support right there. Won't even call it a price target. It was so shallow. I'll just call it a support level, but it was outlined in advance, 211.42. So the flag broke down, but not impulsively at all, and then again, more importantly, you never even broke below the bottom of the flag. You came down and you tested. QQQ tested 211.42 again, successfully held it and bounced back, made a perfect back test, number 1 right there of the trend line from below, and I'm talking about the purple uptrend line, and another back test there. That was at Thursday's high right there, yesterday's high. And then boom, today we gap down. There's an impulsive rejection, and we still, despite the rally today, the fact that we recovered a good part of the gap down. Look, we closed down almost a full percentage point, which is again one of the biggest down days in quite a while on QQQ. So it shows me that we're starting to get a little bit of price deterioration. Look, yes, you're probably thinking, well, the market is just, inches off the all-time highs. I get that. I certainly get that. But again, it's just showing a little bit of a change of character here with the recent volatility. And again, technicals seem to be playing out well so far. What needs to happen next week? 214.34 right here. That's support. That's where we close the week. I don't have the after-hour trades on right now. There's no reason to, because really what happens in after hours on a Friday doesn't matter much. Let's see what happens the future Sunday night when they open and into the morning, and how we open, especially after 9:30, the opening bell on Monday. But that's a pretty decent support level. It was this previous reaction high here, and all these candles. Look at the bodies of the candles. Forget about the little skinny part. You had that one little break below and the gap down. You get opening order imbalances in the morning, and that's what happened right there on that candle. But every other candle respected that 214.34 level, and so that's it. So bulls want to see that level held, and see this on Monday. Bears want to see that level get taken out, and if you do, 211.42 is still support. However, we've already tested it enough that I think we'll have any reaction. I think will probably be fleeting and minor, and then we'll come on down. And as I've been looking at for the last week or two, looking for a backfill of this gap right there. There's a gap right there, and runs from about 209 down to about 207.46. So at bare minimum, I still think we test the top of that gap, and depending on the nature how things look next week, if assuming of course we get some more downside, then there's a good shot. I think we'll maybe go in for a full backfill of the gap, taking us down there at about 207.46. What would that mean if it happens from where we're at or where we closed today? It would mean, well, to visit the top of the gap about 2.5%, and to backfill the gap, you're talking about a little over 3%. There it is. The divergence is still very much intact. That's something else that factors into my analysis. When we made the divergent high before the breakdown in that sell signal there, we had a divergent high, I should say, before the trend line break, and this was just a kickback rally and a back test of the trend line. That's all it was. And just like back here, we had a major primary trend line break there, back test, went up, made a marginal new high, still kept the divergence intact. You can see it down here and here, and then finally we went on, and that was the biggest drop that we'd had in weeks or months right there. So leaning that way towards next week, again acknowledging the trend has been resilient. And again, there's a lot of fish to fry out on the long side. I'm doing this as general stock market analysis, because other than saying here's your supports, if you think the market's going a lot higher, if I didn't have all the divergences, starting to see some little minor cracks here, then I might be looking to position long in a dip, but I'm not at this point. Let's see what happens next week, and if we get there, and how the indicators look, and maybe we'll have an objective long entry. We'll see, or maybe we have more downside. That's the other thing I've made clear recently. Don't forget, I'm not going to spend time going over the weekly and monthly and daily charts, but we still have all the divergences building on those longer term time frames, which set the stage for the market to catch people off guard when they least expect it, and get a much more than just a 3% pullback. But as of now, that's really all I can make the case for, because we don't have anything remotely close to sell signals on the daily chart, and the price action's been very, very bullish, and trend has been resilient lately. Okay, so there's your levels to watch on QQQ. And SPY traders, same story. You can see very similar story, I should say. Divergence still very much intact right there, negative divergence right there into the recent highs. And that was your divergent high. So the SPY, as I mentioned, broke down before NQ or QQQ, and went on and back tested, and we had that most recent divergent high there. You can see the levels. So really what I did is I color coded these lines, the ones that I think are the most salient lines to watch or levels to watch at this point, and that would be that 319.50ish level right there on SPY. That's the top of the gap right there on SPY, and if that breaks, you probably get a backfill of the gap. That's 317.62. You know, not talking a very big move down, but again, there's nothing to say that that won't contain the move. I think SPY comes on down here. I'm leaning towards a move to 315.34. I can tell you right now. I think that's based on the pattern, the technicals, everything in the charts right now. I think there's a good shot at that, and that'd be a little bit, obviously, a little bit deeper drop. A little better than 2%, and I know that's not much, so trade it as you want. Now, like I say, if you are open to the possibility of more downside, if let's say we start moving down and we get there, well, an active trader can either cover right above that number and maybe even reverse to go long for the bounce or even the next leg up if that's where you think things are going, or you just if a short trade starts to pan out, then you just periodically lower your stops and let it run. See if there's any more downside. There's still more work to be done. Like I said, I can't make a strong case, but anything's possible, and I know that the markets like to catch people off guard, and just at the point where it seems that it couldn't get any more bullish and everyone wants to buy, well, that's when you can get some pretty big drops. You get short interest gets low, the VIX is at low levels, everyone's buying calls instead of puts, and that's when you get the big drops. IWM, there's the levels, and I favor a move down here ultimately to, well, at bare minimum, I think we'll probably get to that 163.02 right there, and this is a really nice support here, and that's an area too. If you're a small cap trader, you might want to go long if we get there, but let's see what happens when we get there. It's about 160. 159.55 to 160 is a support zone there on IWM. But what I mean by that is if we get down to 160, how's that going to look on the daily chart here? It's going to bring us in for a back test of the big breakout on the daily, and that would be a pretty objective long entry. But you have the divergence, everything else. We could see more than that. So I don't want to get ahead of myself. First things first, we have to get a half decent correction. We've had some half decent sell signals lately, but they're still in the process of playing out. And again, we were closed red today. And then we'll wrap it up with Apple, the big Apple. Until Apple breaks, it's hard to see the market going down very far. Anything's possible. I've seen Apple, and the stock market, go in different directions at times, but it's not very common. This is one of the top components of the NASDAQ 100 and the S&P 500. These targets I added here, updated yesterday. Let's see from where we're at, where we closed today. Yeah, it's still actually a little more now, be closer to a 6.5% drop if we hit that 279.11 target, and then a little better than a 10% drop down to that 267 target. Now, let me be clear. Targets are potential targets triggering, pending a sell signal. A sell signal will come if and when it breaks above this price channel. The charts certainly look like it. It's been a resilient stock. Everybody wants to own and keep buying Apple right now, and that will happen until it happens. Sometimes these divergences don't play out for a very deep correction. In that case, we had a divergent high right here. We broke a smaller price channel, and we corrected, but guess what? We corrected in time, well, a little bit in price. We went down from here to here. There was a correction. That was probably 3% or more, but mostly a correction in time. This time around, we're getting more extended, especially on the daily time frame. So look for a break of the channel, solid break of the price channel. It's a subtrend line right here, comes off the early December lows, and especially 60-minute close. That would open the door for a move down to 279.11 and quite possibly the 267.70. Now, if you got that, again, let's do the math on it. I already did it, 6.5%, closer to 10.5%. Then you're most likely looking at a larger correction in the stock market. It would be hard to see Apple fall 10% and not see the NASDAQ 100 fall at least 5%. Really doubtful. So watch this level. And again, if you missed the recent coverage on Apple, I had a couple boards here. There it is. Just what I noted was the extreme overbought conditions and divergences. I know it looks like the stock will never go down, and that's what it probably felt like to everybody here and here when we had negative divergence and extreme. The purple line is the extreme overbought reading on the RSI 14. That's a level of about 80, and you can see that Apple rarely gets there, and when it does, you have these usually these double taps. You hit it once, twice, you get these divergent highs, negative divergence, and that's where the much bigger drops come from. So this is, I know it might seem doom and gloom. Now, what do we need to trigger the sell signal on the daily? Well, you have a significant price channel here. You have this longer term price channel in this trend line here. So I'm going to set a price alert now. If I don't already have one, if I do, it'll just duplicate it, and that would trigger a more powerful sell signal. So there it is. And again, I just go back to periods like this, and this is when sentiment is extremely bullish. This is when positioning is long. You start to get lopsided, shorts start to give up, and so there it is. So we don't have any sell signals, nor would we have them unless Apple fell at least about, let's call it 6% or more to get down through there. It'd take a drop of about 5% just to get down to that trend line, and we haven't hit it in a while, so that's also a place to maybe game a bounce if we do get there. Trading price channels, this is TA 101. When you identify a well-defined price channel, whether it's upward sloping, downward sloping, or even a sideways trading range, horizontal price channel like this, it's simple. You go long at the bottom of the channel, and you close your long and or reverse to short at the top of the channel. Wash, rinse, repeat. That's the pattern for trading a channel. So here we are at the top. Now, you need sell signals to go short. For example, if you shorted the top of the channel here, well, guess what? It kept going up, 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 up until we finally dropped and went to the bottom. So again, we'll watch that 60-minute chart to give us clues. That's probably the uptrend line right here. That would be it on the 60-minute chart. So you trigger that, and that will most likely open a door to the bottom of the channel. And again, that'll have an impact on the stock market. Okay, we'll wrap it up here, and we'll pick it up next week. Everyone have a good weekend. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.